Assalamualaikum to my respectful lecturer, Madam Masniza. I am Diana Sofia, Cik Aladita. Today, my friend and I will presenting topic of internal and government financial audit and operational audit under chapter 26. So, my friend is Muhammad Anik, Ahmad Amin, Nur Adila Anati, Nur Syahira, Muhammad Ashraf Naim, Muhammad Danish Akmal dan Muhammad Daniel Buhari. So, I will start. Next slide. Right. So I will start with what is internal auditing. Internal auditing is an independent objective assurance and consulting activity designed to add value and improve an organization operation. It helps an organization accomplish its objective by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control and governance process. Okay, next slide. Next slide. Alright. So this definition reflects the changing role of internal auditor. They are expected to provide value to the organization through improved operational effectiveness while also in performing traditional responsibilities such as reviewing the reliability and integrity of information, ensuring compliance with policy and regulation, safeguarding assets. Okay, so next. Professional guidance for internal auditor is provided by the Institute of Internal Auditor (IIA), an organization similar to the AICPA that establish ethical and practice standards, provides education and encourages professionalism. The IIA has played a major role in the increasing influence of internal auditing. For example, the IIA has established a highly regarded certification program resulting in the designation of Certified Internal Auditor (CIA) for those who meet specific testing and experience requirements. The Institute of Internal Auditor Ethical Principles and Code of Ethics have four main points, which is integrity, objectivity, confidentiality, and competency. The integrity of internal auditors establish trust and thus provide the basis for reliance on their judgment. For example, perform their work with honesty, diligence, and responsibility, and also observe the law and make disclosure expected by the law and the profession. Then the objectivity, internal auditor exhibit the highest level of professional objectivity in gathering, evaluating and communicating information about the activity or process being examined. Internal auditor make a balanced assessment of all the relevant circumstances and are not unduly influenced by their own interests or by others in forming judgment. For example, not accept anything that may impair or be presumed to impair their professional judgment. Also, disclose all material facts known to them that, if not disclosed, may distort the reporting of activities under review. Then, confidentiality. Internal auditor respect the value and ownership of information they receive and do not disclose information without appropriate authority unless there is a legal or professional obligation to do so. For example, be prudent in the use and the protection of information acquired in the course of their duties. And the competency. Internal auditor apply the knowledge, skill and experience needed in the performance of internal auditing service. For example, engage only in those services for which they have the necessary knowledge, skills and experience. Also, continually improve their proficiency and effectiveness and quality of their service. Meanwhile, Institute of Internal Auditor Professional Practice Standard have two main points, which is attribute standard and performance standard. Attribute standards include purpose, authority and responsibility, independence and objectivity, which is internal audit must be independent and internal auditor must be objective in performing their work. Then impairment to independence or objectivity, proficiency and due professional care, quality assurance and improvement program. While performance standard included managing the internal audit activity, nature of work, engagement planning, which develop the document a plan for each engagement, including the engagement objectives, scope, timing, and resource allocation. Then performing the engagement, communicating result, monitoring progress, communicating the acceptance of risk. Okay, next. So the relationship of internal and external auditor in the middle of the diagram show a similarity with their competency that must apply knowledge, skill, and all experience in auditing. Objectivity that remains objective in knowledge, skill, and experience in auditing. Methodology that use same method in performing their audit. Audit risk model and material that to decide the extent of their test and evaluating result. Also, both are provided assurance and auditor reports communicates issue in the financial process. However, external auditors are responsible to the owner of the company, which could be anybody from its owner to the shareholders to the government or general public. Internal auditors are responsible solely to the company's senior management. External auditors are appointed by the shareholders of a company, although this usually comes through discussion with directors. External auditor must be appointed from a different company independent of their own, while internal auditors are usually employees of the organization. Management will set the objective for internal audit, while external auditors generally have free to examine and assess every aspect of the system. Okay, next. So, the guideline to director on statement of internal control is to provide guidance to director of public listed companies in making disclosure in their company annual report. This is because in making the statement, companies are required to explain their governance policy, including any special circumstance which have led them to adopting a particular approach. Second, Timber Report 1999, providing directors of UK listed company with guidance on risk management and internal control and their obligation with regard to both under the Combined Code of Corporate Governance. Third, explain the key areas that director must pay attention before they can make a statement in regards to their company internal control, as well as to select and apply appropriate accounting policies. Fourth, emphasize the needs for proper risk assessment, identify the hazard, decide who might be harmed and how, evaluate the risk and decide on control measure, record your findings and implement them. Then also to evaluate the adequacy and the integrity of their company system of internal control, and directors are also expected to independently consider other areas that are specific to the type of business that they are engaged in. Okay, next. This slide is explain the primary source of authoritative literature for doing government audit is Government Auditing Standard, which is issued by the Jabatan Audit Negara. The initial manual audit standard were similar to the GAAS standard but have been expanded in the subsequent revision to provide guidance standards for performance audit. These standards are often called generally accepted government auditing standard. Several categories of information to audit, including financial statement of governmental units, government contract and grants, internal control, fraud, and other non-compliance with law and regulation. Because governmental units are as concerned with compliance with law and regulation as they are with the reliability of financial statement, these categories of information were broader than audit under auditing standards. Okay, next. Okay, so these are example standard in manual audit. Materiality and significance. The threshold of acceptable audit risk and materiality may be lower than an audit of commercial enterprise. This is because of the sensitivity of government activities and their public accountability. Second, quality control. CPA firms and other organizations that audit government entities must have an appropriate system of internal quality control and participate in an external quality control review program. Next, compliance auditing. The audit should be designed to provide reasonable assurance of detecting material misstatement resulting from non-compliance with provision of contract of or grant agreement that have a material and direct effect on the financial statement. And last, reporting. The audit report must state that the audit was made in accordance with generally accepted government auditing standard. In addition, the report on financial statement must describe the scope of the auditor, test of compliance with law and regulation, and internal control, and present the result of those tests or refer to a separate report that include that information. So that's all from me. I will pass to the next presenter.
Okay, Bismillahirrahmanirrahim. Assalamualaikum. I'm Muhammad Dinesh Akmal bin Zulkifli. So for my subtopic is I will explain about a little bit about Audit 1957. So what is Audit 1957? Audit 1957 is Audit Act was created to make sure all the audit work follow their standard. So the standard is first the federation and of the state. Second is fund established in the state or the federal territory, Article 97. Third is public authorities. Fourth, other corporate bodies in receipt of a grant or loan from federation or a state. And last is other fund. So next slide is next is audit and reporting requirement audit manual. So there's a guideline for public listed company to prepare auditing purpose. This is detailed about audit at 1957 that public listed company must comply with. Why you should audit public listed company? First, is usually public listed company have a shareholder, and there many people invest in the company, and that we call public fund. So that's why we should audit this company. So the requirement is first audit 1957. Second is Jen's practice and experience. Third is standard used by accounting profession. Four is international organization of supreme audit institution, or we call it in TOSAI. And last is other supreme audit institution. Next slide. Okay, for this slide is I will explain about the materiality. So what is materiality? It refers to the benchmark used to obtain a reasonable assurance that audit does not detect any material misstatement that can be significantly impact the usability of financial statement. So second point is quality control. It refers to process of the company to review the quality of all the factor involved in the production. Company should make rules and guidelines to all their workers. Third is compliance auditing. It is to prepare document or every report such as financial statement or financial reporting must follow rules and the standard of the standard. So fourth is reporting in financial statement. Every company must present fairly in financial statement in all of material. Last but not least is there's one point that apa mistake tertinggal. I forgot to type is audit file and working paper. Every evidence that present by the company must sufficient, and every auditor must follow the guideline that we call audit program. So next slide is ni. So last slide, last subtopic is reporting requirement of Audit Act 1957. So the first point is essential account and record have been properly maintained. It is it's mean that the company not follow standard that required by Audit Act 1957. There are many secret that company does not disclose. Secondly is monies have not been fully accounted for. It mean that the company have not enough transaction, expenditure or revenue that have not been recorded regarding the revenue or expenditure that company made. Third is money have been expended other than for purpose for which it was appropriate or approved. It means that money that the company spent on the business had been used for the personal purpose, not the company purpose, but the check was authorized. Fourth is the revenue collected or money expended in contravention of law or established policy. It means that the money that they gain was not comply with law or policy. This is because the company not selling their product based on the registration. Okay. Last point is the rules. Last point is the rule and procedure have been insufficient. The rule and procedure has not been sufficient. That means that the rule and procedure in the company are not fully comply. Okay. For example, safeguard properties, asset and store, secure and effective check on assessment, collection and proper allocation of the revenue and other receipt. Last is ensure the expenditure have been made only as authorized. That's all from me. I will pass to the next presenter.
Okay, Assalamualaikum. My name is Nur Adila Anati, and now I will continue the presentation. Okay, for the general guidance of auditors, the auditor must have a good understanding and familiar with Malaysian approved standard on auditing, which is MASA. So what is MASA? MASA is a compilation of formal standard used by auditors for auditing financial report of businesses. Next, the auditors also should recognize the federal constitution, law and other legislation. Next slide. Okay, now we move to operational auditing. The purpose of operational auditing is to determine the effectiveness or efficiency of any part of an organization. So basically, the objective is to appraise the effectiveness and efficiency of an organization. For example, internal control effectiveness testing by an internal auditor may thus be regarded part of operational auditing if the goal is to help a company run its operation more effectively and efficiently. Next. Okay, now what is different between operational auditing and financial auditing? There's three differences, which is the first one is purpose of audit, second is distribution of the report, and the third is inclusion of non-financial area. Next. Okay, now we move to the first differences, which is the purpose of audit. Okay, under the purpose of audit, there are two differences. The financial auditing, they emphasizes whether historical information was correctly recorded, while the operation auditing, they emphasize the efficiency and effectiveness of an organization. Next, the financial auditing oriented to the past, while operational auditing more focused on improving the future performance. For example, an operational auditor may determine whether a particular type of a new material is being purchased at the lowest cost possible price in order to save money on future raw material purchases. Okay, now I pass to the next presenter.
Okay, hi and Assalamualaikum. My name is Nushahira binti Muhammad Nur Azwan. I will continue to the second major differences between operational and financial auditing. The next point in these differences is the distributions of the reports. Typically, financial auditing reports are distributed to external users of financial statements such as stockholders and bankers, whereas operational audit reports are primarily intended for management. Financial auditing report must be distributed widely to public and have a standard format which necessitates a well-defined structure and wording. While operational auditing, because of the limited distribution of operational reports and the diverse nature of audits for efficiency and effectiveness, operational audit reports can vary significantly from audit to audit, which do not need to publish publicly and does not have a standard format. Next. Okay, this is the last differences measure, which is inclusion of non-financial areas. Financial audits are restricted to issues that have a direct impact on the fairness of financial statement presentation. For example, a financial auditor will provide advice on how to avoid fraud in that company, while operational audits cover all aspects of an organization's efficiency and effectiveness. An operational audit, for example, could look at the effectiveness of an advertising campaign or the productivity that company. Next. Okay, this is the part is effectiveness versus efficiency. Auditor must first define specific criteria for measuring effectiveness and efficiency before conducting an operational audit. In general, effectiveness refers to achieving goals such as producing parts that are free of flaws. In an operational audit, for effectiveness, for example, an auditor may need to determine whether a governmental agency met its assigned goal of achieving elevator safety in a city. The auditor must establish specific criteria for elevator safety in order to assess the agency's effectiveness. Then, the term efficiency refers to determining the resources used to achieve those goals, such as determining whether parts are produced at the lowest possible cost. Before operational auditing can be meaningful, there must be defined criteria for what it means to do things more efficiently. When efficiency is defined as reducing costs without reducing effectiveness, it is often easier to set efficiency criteria than effectiveness criteria. For example, if two different manufacturing processes produce a product of identical quality, the lower cost process is deemed more efficient. Next. Okay, this is the 5 types of typical inefficiencies are frequently discovered during operational auditing. The first point is the cost of acquiring goods and services is prohibitively expensive. For example, bids are not required for material purchases. Second, when raw materials are required for production, they are not available. For example, because necessary materials were not ordered, an entire assembly line must be shut down. The third point is employees are putting in extra effort. For example, because the accounting and production departments are unaware of each other's activities, they maintain identical production records. The next point is work is completed that serves no purpose. For example, copies of vendor invoice and receiving reports are sent to the production department where they are filed and never being used. And the last point is there are far too many workers. For instance, office work could be done more efficiently with one fewer administrative assistant. That's all from me. Now I would like to pass to the next presenter. Thank you.
Thank you, Shaira. Okay, next, it's my turn. Hello, my name is Muhammad Ashraf Naim bin Sardi. So I'm gonna talk about the relationship between operational auditing and internal controls. So for this, there is 3 main points for this part, which is the first one, financial reporting truthfulness. The second one, operational efficiency and effectiveness. And the third one, observance of all relevant laws and regulation. So for the next slide, I'm going to talk more about the 3 main points in the relationship between operational auditing and the internal controls. For the first one, the financial reporting truthfulness. In this point, it aims to ensure that financial data is presented fairly and in accordance with accepted accounting standards. And for the second main point, operational efficiency and effectiveness. An organization must take a good care about the efficiency in the part of audit. So, organizational efficiency and effectiveness are the focus of operational audits. For the third part, observance of all relevant laws and regulation. The failure to follow applicable laws and regulation might result in a hefty consequence for the business. So all the business have to follow the rules and the regulation that been met, so that the business is can run smoothly. Next part, I'm gonna talk about the type of operational audits. There is three main types in the operational audits. The first one, functional audits. Okay, in this functional audits, we're gonna talk about the roles. The three main roles are a way of categorizing a company's activity. So, in the functional audits, it is deemed to make the categorize of the company's activity. The second part is can be classified and subdivided in a variety of ways. And the last part in functional audits is they focus on one or more functions inside company. Okay, next I'm gonna talk about the second type of operational audits, which is organizational audits. An organization is involved with a single organizational audit, which means in organizational unit, the whole company is involved with all single unit department that happen in that company. Okay, the second point is organizational audit focus on how function interacts efficiently and effectively. And then the last operational audits is special assignments. It arises in response to a management request for a wide range of audits. Next, I'm going to talk about who performs operational audits. Okay, like in my slide, the operational audits performed by the internal auditors. So what is the main roles of the internal auditors? There is four main roles for the internal auditors. The first one, the internal auditing includes both operational and financial auditing. The second part, internal auditors have a competitive advantage when conducting operational audits. The third one is internal audit reports to the board of directors or the president. And the last part is internal audit has access to and is in constant communication with the audit committee of the board of directors. So all the points that I stated in my slide is what the roles of internal auditors. That's all from me. Thank you.
Okay, thank you, Naim, for your presentation. So I will continue with the government auditor. So the one who perform operational audit is the different federal and state government auditors perform operational auditing, often as part of doing their financial audits. So and then I will proceed with the purpose of economic and efficiency audit is to determine whether the entity is acquiring, protecting, and using its resources economically and efficiently, and also to determine the causes of inefficiencies or uneconomically practice. And the last but not least is whether the entity has complied with the laws and regulations concerning matters of economic and efficiency. And then in the other hand, program audits. The purpose of program audits is to determine the extent to which the desired result, benefit established by the legislature or other authorizing body are being achieved. And it's also to determine the effectiveness of the organization's program activities or functions. The last but not least is whether the entity has complied with the laws and regulations applicable to the program. Okay, next slide. Next slide is about CPA firms. So the purpose of CPA firms is to identify operational problems and make a recommendation that may benefit the audit clients. Recommendations can be made orally, but they are typically included in management letter. In order to provide useful information for giving operational recommendation, external auditor must obtain the background knowledge about the client business. Usually, management engage the CPA firm for these audits only when the company does not have internal audit staff or if the internal audit staff lacks expertise in a certain area. In some cases, management or the board of director outsource the entire internal audit function to CPA firm. In most cases, the CPA firm's management consulting staff perform these activities. Please note that CPA firms cannot provide these services to their public audit clients. Next slide. And next slide is about the independence and competence. There are two important qualities for operational audit, which is independence and competence. Independence is a seldom problem for CPA firms auditor because they are not employed by the company being audited. The independence of internal auditor is enhanced by having the internal audit department report to the board of director or presidents. Competence is of course necessary to determine the cause of operational problems and to make the appropriate recommendation. However, competence can be major obstacle when operational audit deals with a wide range of operating problem. For example, imagine the difficulty of finding qualified internal auditors who can evaluate both the effectiveness of an advertising program and the efficiency of production assembly process. The internal audit staff doing that type of operational auditing will presumably have to include some personnel with backgrounds in marketing and others in productions. Next slide. And the criteria for evaluating efficiency and effectiveness, there are two types of criteria, specific criteria and source criteria. So that's all for me, and I will pass to the next presenter, which is Ahmad Amin.
Okay, I'm Ahmad Amin. I will present about the plan and perform of an operational audit. So, like what previous presenter shared, there are two criteria in evaluating this plan and perform an operational audit. The first one is specific criteria. Before we starting an operational audit, we will usually desire more specific criteria about what we want to do, how we want to make this operational audit will result the good outcome. So there are a few questions might be used in order to evaluate plan layout. The first one is, were all plan layout approved by Home Office Engineering at the time of original design? The second one is, has Home Office Engineering done a re-evaluation study of plan layout in the past 5 years, which that what the outcome from the previous 5 years they are performing they perform the operational audit. And the third one is each piece of equipment operating at least 60% of capacity for 3 months or more each year? Next slide. Next slide. The fourth one is, does layout facilitate the movement of new materials to the production floor? Does layout facilitate the production of finished good? Does layout facilitate the movement of finished good to distribution centers? Does the plan layout effectively use existing equipment? And is the safety of employees endangered by the plan layout? So, the next slide. Next slide. So, about source of criteria, there are 4 source of criteria that the operational auditor use in regaining or collecting the specific criteria that I just shared about. So, the first source of criteria is historical performance. It based on actual result from prior periods, which that what they have develop the operational audit for the previous year, the outcome, how the outcome result to their operational audit to the company, and what is the benefit or the weakness from performing the previous operational audit. So it's a good for us, for the auditors to compare the better or worse operational audit they have been used before, and it's easy to derive because they have been record the performance by the auditors. The second one is benchmarking, Entities within or outside the client's organization may be sufficiently similar to the client's organization to use their operating result as criteria. Auditors should use care in selecting organization to use as benchmark, which means that other company they may performing the different operational audit so that the auditors can take one of the best operational audit to become the benchmark for him to evaluate or to develop the new operational audits without 100% copy the previous operational audit. Next slide. The third one is engineered standard. This may be possible in some engagement to develop criteria based on this. However, it often time consuming and costly to develop because it uses a lot of expertise to develop these sources, develop this standard, but the auditor can use time and motion studies to determine efficient production output rates because it was the cost because it is usually used in the industry by the group of that have a lot of funding. And the last one is discussion and agreement. This criteria can be developed through discussion and agreement because some of the criteria are difficult or costly to obtain. Like if you use the engineer standard, we have to fund out a lot of money. But through discussion and agreement, we can gain a lot of information, a lot of input from the discussion from the party that involved in this method. So the party involved should include management of the entity that to be audited, the company that to be audited, the operational auditor, the one that need to perform this operational audit, and the entity or person to whom the finding will be reported. Next slide. So the next presenter will share about the phase in operational auditing, such as planning, evidence accumulation and evaluation, and reporting and follow-up. Thank you.
Assalamualaikum to Madam Masliza and my fellow friends. I'm Muhammad Dinam Khori. Will be presenting about phases in operational auditing. There are three phases in operational audit, which are plannings, evidence accumulation and evaluations, and reporting and follow-up. First, let's discuss about planning. In planning phase, the operational auditor must define and convey the scope of the engagement to the organizational unit. Additionally, it is important to staff the engagement properly, obtain background information about the organizational unit, understand internal control, and decide on the appropriate evidence to accumulate. The variability caused by the breadth of operational audits makes it difficult to decide on precise objective, which is a fundamental distinctions between preparing an operational audit and a financial audit. Auditor choose objective based on engagement criteria, which are tailored to the individual circumstances. Second, evidence accumulation and evaluations. Evidence is any information used by the auditor to determine whether the information being audited is stated in accordance with the established criteria. Operational auditor must amass adequate evidence to support a conclusion about the objective under the examination. Because internal controls and operating procedures are such an important aspect of operational auditing, therefore, the documentation, client inquiries, analytical procedures, and observation are frequently used. Next slide. Next, reporting and follow-ups. There are two significant distinctions between operational and financial auditing reports that have an impact on operational auditing report. First, the report is normally sent only to management in an operational audit. Second, due to the variability of operational audits, Each report must be customized to address the audit scopes, findings, and recommendations. When auditor offers recommendation to management, they frequently conduct follow-up to assess whether the recommended changes were implemented. Next, let's move to the next slide, which is example of operational audit findings. First example is outside janitorial firm save 160,000. An internal auditor will review the efficiency and effectiveness of the janitorial services furnished by state. Sorry. An internal auditor review the efficiency and effectiveness of the janitorial services furnished by state employee for the buildings in the state's capital complex. The audit disclosed the cost of the janitorial services were excessive when compared with similar services performed by outside janitorial firms. Furthermore, the auditors found that many janitorial tasks were not done properly, which led to poor quality. Another example of operational audit finding is use the right tool. Internal audit of the company find out that only a few of the truck of the company is being used for delivering and picking up vending machines. Therefore, the auditor recommends most of the truck be phased out and replaced by conventional van. Lastly, computer program save manual labor. The computer assistant saved manual labor and detected several employees who were not eligible for the company plans, such as employee with less than the required 1 year of service and terminated employee still on company plans. That's all from me and my friend. Thank you.
Kemudian